Very welcome to our webinar today. Thanks for taking the time to register and join us. World-renowned Dr. Marc Faber is our guest today, and I'm confident that we will be imparted with some very valuable nuggets indeed. We have a 30-minute session today in which Dr. Faber will answer questions about the big global macro picture, about precious metals and other opportunities. But before we begin, I want to draw your attention to the Q&A session. Please use the question section in your GoToWebinar panel to post a question. The Q&A is always a popular section, and we'll do our best to answer as many as we can. Questions we do not get a chance to answer will be answered in subsequent webinars. A brief introduction to Goldcore and myself, the host for today's webinar. My name is Marc Faber. I am the founder and head of research in Goldcore. I studied history and Greek and Roman civilization at university and took a keen interest in the role of currency debasement in the decline of empires. This is something I know Dr. Faber has frequently looked at and written about very eruditely. Goldcore are respected international bullion dealers and have over 3,600 clients in over 40 countries, with over 205 million in assets under management and storage. We offer gold, silver, platinum, and palladium coins and bars and storage services in London, Zurich, Perth, Hong Kong, and increasingly popular Singapore. Our clients are mass affluent, high net worth, family offices, and other institutional investors. Our bullion trading platform is one of the most sophisticated and safest in the industry. Clients' bullion coins and bars are individually allocated and segregated under direct client control and ownership. Bullion is owned in ultra-safe vaults strictly outside the global banking system, thereby eliminating counterparty risk. We deliver bullion coins and bars globally, and storage clients can take delivery of their bullion at a moment's notice. More importantly now, an introduction to our esteemed and most welcome guest. It gives us great pleasure, and we are honoured to have Marc on with us today. We first became aware of his astute analysis and his wonderful research on economic and monetary history in the late 1990s. His book, Tomorrow's Gold, Asia's Age of Discovery, published in 2002, was and is still one of the best books about history, economics, and investments we have ever read. Marc is an investment advisor and an economic historian. The words investment guru are bandied about too frequently, but Marc is just that, and his track record speaks for itself. He predicted the 1987 Wall Street crash, the bursting of the Japanese Nikkei bubble, bursting of the various property bubbles in recent years, and indeed the Eurozone and global debt crisis. He is the publisher of the Gloom, Boom and Doom report, which I would highly recommend to listeners. It is a monthly market commentary, and at $300 per annum, it is an absolute steal. So, time is of the essence. Let's get started. Good afternoon, Marc.
Good afternoon.
Thanks again for joining us. It's great to have you on. It really is.
It's my pleasure. Thank you.
Thank you. So the first question today is, do you still believe that Asia offers more opportunities than the West?
Yes. The question needs to be addressed in the short term and in the long run. I moved to Asia in 1973, partly because I felt that Asia had far better growth opportunities than the Western world, and less regulation, less government intervention, and I still feel that way today. In fact, when I moved to Asia, China was still a closed system. There wasn't a stock market in China. There wasn't even a stock market in Indonesia, and foreigners couldn't buy shares in South Korea, Taiwan, and India. And since then, all these markets, as a result of globalization and the removal of foreign exchange controls, have opened up. So I think there's still plenty of opportunity. But don't come to Asia in the expectation that you will get the same benefits as in Europe, in the sense that the nanny state always bails out people and provides them with social security and health care and all these things. In Asia, one is an own entrepreneur and one has more freedom, but also along with freedom, more responsibility.
Okay, very interesting. And would it be your view that Asia offers more opportunities because of, I suppose, the hard-working nature of the people and the lack of debt levels over there?
Well, not only that, we have had also in some countries, notably China, very strong credit growth, but in others, credit growth has slowed down. As an example, in Vietnam, and there has been a period of deleveraging. But basically, we have a far more dynamic economic system in the sense that as a percent of the economy, whereas in Europe and in the US, the government is approximately, with all the local governments, the states and the federal government, the government is roughly 50% of the economy or more, and the government, the larger it is, the less freedom people have, the more laws there are, the more regulations there are, and the less dynamic the economy is.
Absolutely.
And in that sense, I still feel that there is potential in Asia.
Absolutely, that makes sense. And is that, I read recently a Barron's Roundtable interview that you were very favorably disposed to Thailand and Vietnam, and presumably the reasons you just outlined there are the reasons why you are bullish on those countries.
Well, in that interview, what I mentioned is that from 2009 to 2011, essentially we had a strong recovery in emerging economies from the lows. And since 2011, emerging economy stock markets have grossly underperformed the U.S. So what you have is high valuations in the U.S. today and relatively low valuations in emerging economies. And my sense is that it's too late to buy the U.S. It's fully priced. The returns going forward are going to be disappointing, whereby different sectors will perform differently. Whereas if you take a 5 to 10 years view, I think you will make money out of emerging markets, notably the Asian emerging markets. They are not problem-free, don't get me wrong, but from a valuation point of view, they seem to be now reasonably priced. They're not very inexpensive, but they're reasonably priced.
Very good. And your outlook for Hong Kong and Singapore?
Well, my favorite market in Asia, and I mentioned at that time that in this Barron's Roundtable, is Vietnam. Singapore is an economy that is mature. It's the richest country in the world if you consider everything. It's also a rather expensive economy that is attracting a lot of wealthy people from around the world because of some advantages the state of Singapore offers, including favorable tax laws. And Hong Kong is a play on China. We had a bear market in China until essentially recently. I don't think Chinese stocks are terribly attractive, whereby we have to distinguish. In China, some stocks have gone up a lot, like Baidu, and others are in the dump. So I look at Hong Kong as a way to play China with essentially better corporate governance and less accounting fraud. Okay,
very good. And you are bearish on the West in general, and I suppose, and equities that you believe are overvalued, particularly in the short term. And I suppose you're notorious for being bearish on the Western financial system and Western economies in general. But do you see an Argentina or Soviet Union style collapse, or a more gradual 1970s style stagflation, or indeed 1930s economic depression and World War, or a combination thereof?
Well, we don't know exactly how the end game will be played. We had essentially a horrible financial and economic crisis in 2007, 2008, and then starting March 2009, a stock market recovery. And I was actually positive about U.S. stocks until about 18 months ago. And we had also recovery in European shares, but then European shares dropped once again into May, June 2012 to the 2009 lows or even below. And so at that time, I advised my clients, and I also bought for the money I managed, European shares, and some of them have performed very well. Now, I don't think there is a bargain. There's a lot of bargains left in Europe, whereby, if you look at markets, there are different sectors. The gold mining sector is extremely depressed relative to, say, the S&P. And oil shares are also relatively depressed. Utilities are relatively depressed. So we have to be very careful. The indices may not do very much, but within the market we may have strong group rotations.
Okay, very interesting. In regards to precious metals, do you believe it's silver versus gold or silver and gold?
Well, my preference is to own physical precious metals. And my safe deposit boxes are not large enough to hold physical silver. So I have a preference for gold.
Yeah,
and most of my money is invested in gold. And then because I'm on the board of some gold mining companies and also of Prop Inc. in Toronto, I receive shares in these companies as a way of compensation, as a way of director's compensation. So I own these shares, but my preference is essentially for physical gold and possibly physical platinum.
Interesting. Well, that leads me into the next question, which is your outlook for platinum and palladium, and do you believe they merit smaller allocations in a portfolio?
Well, my view is that individuals should not put all their money into gold and silver, because I think that we need, in absence of knowing how the world that is manipulated economically by governments with fiscal and monetary policies, how the world will look like in 5 or 10 years' time. So I always recommend individuals to hold some real estate, some equities, there were some stocks, some bonds, some cash, and some precious metals. And if someone wants to have a diversification within precious metals, then I would recommend him to hold essentially gold, silver, platinum, and palladium. But as I said, personally, I own principally gold.
And so that leads into our next question, which is your favorite asset allocation in terms of the precious metals. So you would be very much overweight gold and then smaller allocation.
I don't have a favorite. There will be times when silver outperforms gold, and other times when gold outperforms silver, and there will be times when platinum outperforms gold and silver, or palladium. But the point is, and this is not the relevant issue either, precious metals go up and then they'll all go up or they'll all go down. So as an investor, I wouldn't worry too much whether I own silver or gold. As I explained, my preference is for gold because of the storage.
Very interesting. I suppose you've answered this question. It is how do you invest in own precious metals, physical or paper? So you're very much a physical man, obviously. In terms of taking delivery, storing, or a bit of both, it sounds like that you prefer to store it in safe vaults.
Yes, And I think the geographical allocation is very important. I mean, I wouldn't hold any gold in the U.S., period. Now we have these bag carriers of the U.S., countries like Canada and the EU and Australia. So if the U.S. decided to expropriate gold, as they've done in 1933, they would tell their servants, Canada, Australia, and European who have no backbone, you do the same. And then they'll do the same, because everywhere governments are running out of money. So to steal money from people who have savings is a very desirable option for the government mafia.
It can be attractive, and as seen throughout history, and that means you favour. I think recently you said as well that you've long favoured Zurich as a good, safe place to own and store precious metals, but increasingly you favour Singapore as well, don't you?
Yeah, I'm worried about Switzerland because the Swiss have been kowtowing to the U.S. for long enough. Because don't forget, in Switzerland, you basically have a socialist government as well. And they hate people with assets. So if they have an opportunity to take it away, they'll do it. And don't forget, if the U.S. knocks on the door of Switzerland and says, okay, we decided in the U.S. to collect all the gold, you have to do the same, the Swiss will first say no. And the U.S. will say to Switzerland, okay, then we take all your assets away in the U.S., and knowing the Swiss government, they will then say, yeah, then please take the gold as well. You understand?
I do, yeah.
So I feel more comfortable to have gold in a country like Singapore, where the U.S. government will stay out of domestic affairs, because the U.S. needs Singapore since they have a military base there. And the most sophisticated surveillance equipment of the U.S. in Asia is in Singapore. And if Singapore kicks them out, where will they want to go? To Malaysia maybe? To the Philippines? To Indonesia? To Muslim countries? No, they can't. So they'll be really stuffed. So they'll stay out of Singapore. And if they knock on the doors of Hong Kong regarding taking assets away of Asians, the Chinese will say, well, go to hell.
Yeah, okay. I think, yeah, we'd have a similar perspective. Just as being from Switzerland yourself, do you think that the cantonal law and some of the property law in Switzerland may help in that regard? Or you think that Uncle Sam will override?
Maybe, but you understand, not long ago they launched an initiative whereby there would be some increased taxation on people of a certain wealth. And if they put the threshold high enough, say, if they would have a referendum, let's introduce a 20% across the board wealth tax on people who have more than $5 million, then it wouldn't be accepted, because a lot of Swiss have actually $5 million in assets or are hoping to get there. But if the threshold is, say, let's impose a 20% wealth tax on all the people living in Switzerland who have, say, $100 million or $200 million in assets, then most people will say, yes, these are these rich people. And the media is portraying nowadays the rich people as the evil people. They don't portray the central banks that printed money, that lifted the asset values of the well-to-do people up, as the evil people. They portray the rich people as the parasites of society. The well-to-do people, given the money printing, what they did is a rational action in terms of capitalism. They saw the money printing, they thought, okay, let's buy paintings, they'll go up in price, let's buy gold, it will go up, let's buy stocks, and so forth and so on. So their asset value has increased a lot in the last 5 to 10 years, whereas the middle class and the lower classes that have no assets, their wealth has actually been contracting since 2007.
Absolutely, absolutely. And on the precious metals, you do favor.
But that is not the problem of the rich people. This is the problem of money printing.
I know, and it's amazing how it's not recognised, but I think it will be in time. The penny will slowly drop. In terms of, I know you favour a buy and hold strategy for the medium to long term of precious metals, and I think you touched on it before, but in terms of the precious metals, would you favour taking profits and rebalancing? So if silver massively outperformed in the short term, you may take profits and reweight and put the money into gold or platinum or palladium?
Well, I think we had a strong rally in precious metals and precious metals stocks. In the case of precious metal stocks, they bottomed out between, say, the summer of last year and November of last year, and then they started to rise. And in the case of physical gold, we bottomed out, interestingly, by the way, December 31st. You know, this is the end of the year. That's when the bonuses are calculated for the gold dealers that may be manipulating the price down. So anyway, since then we had a strong rally until a couple of weeks ago, and since then we have again retreated in the gold mining shares, the GDX and GDXJ, and we had also a correction in the physical metal prices. Now, I wouldn't take profit on my long positions at this point, and I have maintained that I will never sell my physical gold for the simple reason that it may go up so much that you may be tempted to sell it, but if it goes up a lot, it's because of continuous money printing, and we don't know. I know how mad and insane the members of the Federal Reserve are. They've never worked a day in their lives. They are academics. They are professors, and they believe that, like Russian or Chinese central planners under communism, they can guide the economy forward, sideways, upwards, and so forth. Total disregard for the free market systems and the free market principles and the system of capitalism that essentially has boosted the wealth in the Western world so dramatically over the last 200 years. That they completely disregard. And these people, their madness may lead to printing of money that is today not even thinkable.
Absolutely. So you'll always have a core holding in gold as financial insurance.
Correct.
And in terms of and in terms of asset allocation, do you still see? I think recently you said you and I think you touched on it briefly before, but you said roughly you believed in an allocation of 25% allocation to global equities with a tilt towards emerging markets, 25% to fixed income, securities and cash, 25% in real estate, and 25% in precious metals as almost an optimal type portfolio. Would you still stick with that?
Yes. I mean, when gold was very strong until 2011, September, I was accused, or some of my readers said, Mark, why don't you have so little in gold? I said, well, 25% is actually quite a lot, and much more than most people would own as a percent of their total assets. But I want to be diversified because, as I explained earlier on, we can make certain assumptions about the future, but nobody really knows how the world will look in 1, 5, 10 years' time from now. And so I want to have a portfolio where not everything goes down or everything goes up. With my allocation the way I have it, I'm actually quite heavily exposed to asset markets because the bonds I own, they basically go up when economic conditions are fine. And like in 2008, these bond prices also dropped. In other words, interest rates on emerging market bonds then went up substantially. So these bonds have an equity character.
Mm.
But recently I bought some treasuries, not because I think they're good value, but because I think the U.S. market is grossly inflated, and sometimes this year we'll have, say, a 20 to 40% correction. And at that time, the money will flow out of risky assets into treasury bonds initially. And so the bonds market may actually seem to be unattractive now, which I think I agree with, but it could become attractive. Essentially, to own treasuries today is to be short the stock market.
Yeah, that makes sense. Very good. And a final question then before we have a quick Q&A, and that is in terms of other attractive investment opportunities out there for investors, and even indeed for entrepreneurs who are looking for business opportunities today, where do you see opportunities?
Well, I mean, there are always opportunities. It's a question of how well do you execute your business. I mean, you know, in the U.S., we have essentially a death of retailers because they're no longer particularly competitive, because online shopping has become an important part, and online shopping is depressing prices. So if you own a video store somewhere, the business isn't going to be particularly good unless you offer very special services. The same for electronics shops. These are businesses that may be dying, or newspaper in print may be a dying business. In 10, 20 years' time, young people will read their papers on their computers or tablets or mobile phones and so forth and so on. I'm not saying it's good or bad, I'm just observing. There are some industries that are becoming obsolete and new industries coming up. And there are opportunities all over the world. Same in Asia, there are always opportunities. But there is always an execution risk. I think the whole Indochina is attractive. Cambodia, Laos, Vietnam, parts of Thailand, Myanmar, India, Bangladesh, on the east. That is an attractive geographical area. But if you go and invest in a Cambodian fund or Laos fund, the fund will only perform as well as the execution of the manager. And that is the big problem to invest in these economies. Unless you move there yourself and you study the country thoroughly and you start a business, you need some luck and the right connections to do well.
Understand the culture and relationships are very important as well, aren't they? So, okay, well, that's absolutely excellent. Some great advice there and very practical answers. Thank you, Marc. Now to questions submitted by you, our attendees. So we just have a very quick Q&A here. We've a few questions that have been submitted. The first question is from Mr. Julian Phillips. It came in yesterday, and he wants to know your view on the timing of the use of the yuan as a global reserve currency.
Well, I think the yuan will not be a reserve currency for a long time, but gradually more trade will be carried out in yuan between China and its major trading partners. But to have the yuan as a global currency will not happen anytime soon. Okay,
the next question is from Chris in Chicago. Chris wants to know it's Chris in Geneva. Chris wants to know, when do you think gold will rise to its true price? Do you think banks may be rigging prices through HFT, high frequency trading, or computer trading?
Well, I'm not sure what the true price of anything is. We have manipulated markets with artificial low interest rates, so it's very difficult to say that this is the true price. I can say it costs this much to produce an ounce of gold, and in general the supply isn't going up, and certainly the supply of gold globally is not increasing at the same rate as the supply of confetti money. That should be clear to anyone, that as the supply of credit in the world and as the supply of stupidity by government. So the price essentially should move higher. Compared to all these factors I just mentioned, the price is relatively low at the present time. Has there been manipulation? I have some friends who are better informed than I am, and I have seen academic studies by people who have studied very precisely the London gold market pricing and the subsequent and prior action of gold prices, and according to their studies, there has definitely been manipulation. And I can believe it. But I didn't go myself and analyze everything carefully. I can only say one thing. Something is funny. If the U.S. cannot deliver the gold that Germany wanted to repatriate within 1 week, the question arises, do they actually have the gold or not?
Interesting question indeed. The next question is from Elizabeth in Chicago, and she wants to know, do you think a safer cryptocurrency, so a new form of Bitcoin, might merit a very small allocation of portfolio, say 1 to 3%?
I don't own any Bitcoins. I'm not smart enough to understand precisely what the value of a Bitcoin is. All I can say is, if someone could create a Bitcoin, I suppose that another 1,000 people can create alternative electronic currencies that then will compete with Bitcoin. You understand?
Yeah.
So I don't know exactly what the value of a Bitcoin is. Is it $500 per Bitcoin, or is it $10,000? I have no idea. And so I personally am not interested in Bitcoin.
Yeah, it's very difficult to decipher which cryptocurrency will be
safe
in the long run.
Point. I own gold because when the system breaks down, I want to have some cash. With a Bitcoin, there is a scenario where the system breaks down and you have no internet access. And then what is the value of your Bitcoin?
Absolutely. You're very dependent on companies' technology, on websites, on servers, even on electricity. So
sure.
It's a very important consideration that people don't think about. Very good. And a final question that's just come in the course of the webinar is from Liam in London. And Liam wants to know, I think he's looking for some advice for the Irish government. He wants to know, should Ireland leave the euro?
Well, this is a big question that many countries, I guess, would have asked themselves, is it advantageous for us to leave the euro? I think so far most countries have stayed in the euro because if they leave, their currencies initially are likely to be weaker, and then the pensions that the people receive will be that much lower by the currency depreciation. So I think kind of the political will is to stay in the euro for the benefits people get out of the being part of the eurozone. But I believe that the best system in the world would be to have small countries and avoid large sovereign states. Because if you look at which are the most prosperous countries, they are Singapore, they are Norway, Finland, Sweden, Switzerland, Luxembourg, basically small sovereign states. And democracy functions better in a small society than in a large society, where
more accountability.
wants to grab as much as possible from the steak, from the cake of the economy. So, in a way, I would recommend to any small country to leave the Eurozone.
Interesting. Small is beautiful. Very good.
Why would anyone want to finance the corrupt bureaucrats in Brussels?
That's another way of putting it, and I think a lot of Irish people will identify with those sentiments. So, Mark, thank you very much for your time. Unfortunately, time is up, folks. The clock's against us. Thank you again for giving us your time and your knowledge today, Mark. We really appreciate it. And thank you, everybody, for joining us on the webinar. The webinar is recorded, and I'll send you a link to the recording that you can share with family and friends. If you have not already done so, please sign up for our research in order to be invited to upcoming webinars. Thank you all. Take care. Bye-bye.
Thank you very much. Goodbye.
Mark, thank you. Thank you very much. Enjoy your weekend.